Here's a detailed summary of Microsoft's fiscal year 2025 second quarter earnings call transcript, opening and financial highlights. Microsoft delivered a strong Q2 FY25, with overall revenue reaching $69.6 billion, a 12% increase year-over-year. Gross margin dollars grew 13%, and operating income saw a significant 17% jump. Earnings per share reached $3.23, up 10% year-over-year. The company highlighted double-digit growth across both top and bottom lines, driven by robust demand for its cloud and AI offerings, coupled with improved operating leverage. Microsoft Cloud and AI performance. The Microsoft Cloud surpassed a significant milestone, exceeding $40 billion in revenue for the first time, marking a 21% year-over-year increase. The company's AI business has now reached an annual revenue run rate of $13 billion, an impressive 175% increase year-over-year, exceeding internal expectations. Amy Hood, CFO, noted that Azure AI services grew 157% year-over-year and were ahead of expectations, though overall Azure growth was impacted by capacity constraints and go-to-market adjustments in non-AI services. Key financial metrics and business segments. Productivity and business processes. Revenue was $29.4 billion, up 14% year-over-year. This segment exceeded expectations, driven by strong performance in Microsoft 365 Commercial, particularly the adoption and expansion of Microsoft 365 Copilot. LinkedIn revenue grew 9%, with its premium subscription surpassing $2 billion in annual revenue for the first time. Dynamics 365 also saw robust growth at 19%. Intelligent Cloud. Revenue reached $25.5 billion, a 19% increase. Azure and other cloud services grew 31%, with AI services contributing 13 percentage points of that growth. The company acknowledged that demand for AI services continues to outpace available capacity. Non-AI services saw slightly lower growth due to go-to-market execution adjustments. More personal computing. Revenue was $14.7 billion, relatively unchanged year-over-year. This segment performed better than expected, buoyed by Windows OEM pre-builds, usage from a third-party partnership in search, and the performance of Call of Duty in gaming. Windows OEM and devices revenue increased 4%. Search and news advertising XTC grew a strong 21%. Gaming revenues saw a 7% decline, primarily due to hardware declines, though content and services saw growth. Management's forecasts and future outlook. Q3 FY25 and beyond. Q3 FY25 outlook. FX impact. A 2-point decrease in total revenue growth due to a strengthening US dollar. Commercial bookings. Expected to be roughly flat year-over-year, influenced by a stable expiry base and a strong prior year comparable in large Azure contracts. Microsoft Cloud gross margin. Expected to be around 69%, down year-over-year due to AI infrastructure scaling. Productivity and business processes revenue. Expected to grow 11 to 12% in constant currency. Microsoft 365 Commercial Cloud revenue growth projected at 14 to 15% in constant currency. LinkedIn revenue growth expected in the low to mid-single digits. Dynamics 365 revenue growth in the mid-teens. Intelligent Cloud revenue. Expected to grow 19 to 20% in constant currency. Azure growth projected at 31 to 32% in constant currency, with continued AI capacity constraints, but expecting to be roughly in line with near-term demand by the end of FY25. More personal computing revenue. Expected to be between $12.4 billion and $12.8 billion, with continued prioritization of higher margin opportunities. Windows OEM and devices revenue expected to decline in the low to mid-single digits. Search and news advertising XTC growth expected in the mid-teens. Gaming revenue growth expected in the low single digits. Operating expenses expected to grow 5 to 6% in constant currency. Effective tax rate approximately 18%. Rest of fiscal year and beyond, FX expected to decrease Q4 revenue and COGS growth by more than 1 point. Capital expenditures. Quarterly spend in Q3 and Q4 expected to remain similar to Q2. FY26 CapEx growth is expected to be lower than FY25, with a shift back toward short-lived assets correlated with revenue growth. Full fiscal year FY25. Continued expectation of double-digit revenue and operating income growth. FY25 operating margins are now expected to be up slightly year over year. Full-year effective tax rate expected between 18% and 19%. CEO and CFO statements. Satya Nadella, Chairman and Chief Executive Officer, emphasized the company's core thesis around managing its compute fleet and capital allocation, highlighting the compounding effects of AI scaling laws leading to greater efficiency and exponential demand. Stressed Microsoft's commitment to building a fungible fleet that is globally scaled, balanced between training and inference, and geo-distributed, driven by software optimizations and Moore's Law. Highlighted the progress across the tech stack, from Azure's expanded data center capacity and system efficiencies to the breakout success of Microsoft Fabric and the growing adoption of Microsoft 365 Copilot as the UI for AI. Pointed to the increasing ubiquity of AI, with powerful models now capable of running on PCs, benefiting both customers and Microsoft's platform strategy. Reiterated the strong partnership with OpenAI and its exclusive commitment to Azure. Amy Hood, Chief Financial Officer, presented the strong financial results, emphasizing double-digit revenue and profit growth and better-than-expected operating income. Detailed the performance across the 3 key segments, providing specific revenue figures and growth rates. Explained the drivers behind the results, including the strong demand for AI and cloud offerings, and the impact of FX. Provided a detailed outlook for Q3 FY25, and offered commentary on capital expenditures and full-year expectations. Addressed the slightly lower-than-expected Azure non-AI services growth, attributing it to go-to-market execution challenges in the scale motion and the balancing act between AI and non-AI workloads. Significant risk factors. AI capacity constraints. Demand for AI services continues to outpace available capacity, impacting growth in Azure AI. Go-to-market execution. Challenges in balancing AI and non-AI workloads and adjusting sales motions in indirect channels, scale motion, can lead to temporary revenue impacts. FX fluctuations. A strengthening US dollar is expected to negatively impact reported revenue growth. Competition. While not explicitly detailed as a risk in this segment, the highly competitive nature of the cloud and AI markets is an implicit factor. Capital expenditure management. Significant investments in AI infrastructure require careful management to ensure optimal returns and alignment with evolving demand. OpenAI relationship and Stargate. While framed positively, reliance on partners and the evolution of strategic funding for future training needs are ongoing considerations. Highlights. Microsoft Cloud revenue milestone. Surpassed $40 billion for the first time. AI business growth. Annual revenue run rate of $13 billion, up 175%. Commercial booking strength. Significant increase driven by large Azure commitments, including from OpenAI. Microsoft 365 Copilot adoption, accelerating customer adoption, expansion, and usage. Azure AI performance, ahead of expectations despite capacity constraints. Microsoft Fabric breakout, fastest growing analytics product in company history. LinkedIn premium revenue, exceeded $2 billion annually for the first time. Operating leverage. Improved operating margins driven by efficiency gains. Commitment to innovation. Continued focus on AI scaling laws, software optimizations, and building a fungible fleet. Lowlights. Azure non-AI services growth. Slightly lower than expected due to go-to-market execution challenges in the scale motion. AI capacity constraints. Demand continues to exceed available capacity for Azure AI services. FX headwinds. A strengthening US dollar is creating a drag on reported revenue growth. Gaming segment decline, primarily driven by hardware, though content and services showed growth. This summary aims to provide a comprehensive yet concise overview of Microsoft's Q2 FY25 earnings call, covering the key financial aspects, management's commentary, and forward-looking statements.